My name is Hugh Hendry, and I ran a global macro hedge fund for 15 years. This is an exclusive insight into my journey, what I did, and more importantly, why. And I promise you, it's not what you're expecting.
Welcome to Confessions, Part 16, with me, your co-host, Chris Sweeney, and a hedge fund pirate, Hugh Hendry. He has navigated the seven seas, and we now find him in a new location. Come in, Hugh.
Hi, Chris. I think now we're only separated by a language, and we're only separated by about 20 miles.
By love. You're in London. Is it good to be back home? Or, well, not back home, but back in your one of your places, one of the cities you lived in.
There's many things. The weather is beautiful. I'm in Notting Hill, very close to Portobello Road. I've got this wonderful big house and wonderful family, and so that's great. It's still a miracle that I haven't been arrested yet by the COVID police, but give it time.
If they come and drag you away during this podcast, I will hold the fort, people. Do not worry. Now, we're going to jump straight into the song titles because Mick Jagger is going to figure big time in this episode. He also went to study accountancy, like star hedge fund manager Hugh Hendry, and also he's from London, so it all ties in. 3 songs, Hugh. Paint It Black from 1966. Also, second choice, I think good for a hedge fund manager. You Can't Always Get What You Want, 1969, or later in their catalogue, 1978's Miss You. Which one would have been booming out, Hugh?
It would have to be the middle one. You Can't Always Get What You Want. That is the hidden story of successful investing, accepting that just not every trade will work. And actually, I don't know if my clients got it back then, but I thought if there was any secret magic to the formula, it was that I was never afraid. I was not fearful of the consequences of being wrong. I accepted on a going into trades that you can't always get what you want, and that some of these trades would not work out, but it wouldn't be for the fear of trying, and it wouldn't be for the fear of losing, because we'd given it all great consideration.
We'll move on, but anyone in the comments, if Hugh reminds you of any rock stars and you can make any rock star comparison between Hugh and any of your musical idols, please leave a comment. We will eat them up with glee. But talking about you can't always get what you want, you were right. So you did get what you want about Bitcoin in some ways. You did say be wary, things could go wrong, things could drop, and Bitcoins went down a fair bit. The cryptocurrency markets went down $500 billion. And we've also had a guy come out the woodwork, Craig Wright. He's an Australian guy who lives in Britain, and he says he actually created Bitcoin. And I think there's now going to have some sort of legal proceedings. I'm not quite sure how that's going to pan out. So your thoughts?
Well, again, I do feel you are continuing this malign trend to add words or add your words and give them your
stamp of authority. Yeah, absolutely. Hugh, I go around the street saying, let me tell you what Hugh's saying, and I tell people, no.
To put the records correct, but I have said, hey, the challenge of demonstrating your knowledge and understanding of a position is not to buy something that's going up. Now, let me take one step back. You should be buying things which are going up, but it's not quite as easy as that. Things that are going up do so in a cyclical manner, which is to say that there are reverses within an overall uptrend. And if I had consternation, it was, as we discussed last week, it was the velocity of the move and the magnitude of the move, which is to say that we'd gone from 15,000, I want to say in September of last year, to 60,000. And it felt there was a lot of people who perhaps didn't have my history and understanding and experience in terms of what risk assets can do to you when they have these snapback counter trend rallies. And so I am sure we said this in last week's show. The true test of your understanding of Bitcoin is if you can buy it at 30,000.
And
here we are today. And so let me see.
I think it's just under 50 from what I've last seen, which was a few hours ago.
And so we're, again, if you're listening to on an audio file, we're looking at a chart that begins June 2019, and over that, and you've really got to go to, actually, I said September. You've got to go to almost to the end of last year, around about November, and Bitcoin broke out of this kind of 15,000 level, which had been its high. And it never looked back, and it went all the way up here to 60,000. I put some very obvious trend lines. It had been in this kind of, that had been its motion of direction, which was upwards. It was controlled by this. It broke out of that, and so you would raise it, and then it broke out again, and that's like, oh, that's kind of when you start thinking things are getting a little bit crazy. And it broke out of the third price range. Anyway. We discussed, what did we discuss last week? Coinbase.
Yeah, Coinbase.
And Coinbase was very, very noticeable.
That's the platform. If anyone's not aware, that's the platform for trading all types of cryptocurrencies.
I want to guess that would have been the 14th of April, because they, was it a coincidence? But, remember, investment banks are trying to sell something, and they're trying to sell these new shares, and it's all related to the price of Bitcoin. And Bitcoin thrust and broke through this range. I put this black line saying, oh, actually, kind of 60,000. It goes through, but it can never break through. And we ended up Bitcoin pretty much peaked round about the middle of February. I was going to say the only thing in Bitcoin's favor. Clearly, this is an alternative asset. It has a finite as opposed to an infinite supply that you would associate with currencies. And it's portable. You can just go through the airport, go into another country, and then get access to the Wi-Fi and download your money in another domain, if you will. So clearly, it has much to commend it. But in my world, the only thing that it had was profound momentum. It was surging higher, and that momentum had pretty much left the building had begun to leave the building from the middle of February. And by now, as you can see, that momentum has gone. So as a speculative plaything, losing your momentum it's not quite losing your virginity, but it spells trouble.
See,
and it normally
lingerie. He's people. We know what his mind is. We know what his mind is today. Sorry, carry on.
You always just make this smutty, Chris. And so I would expect this thing. It would not be out with the realms of fantasy to imagine that Bitcoin for this move could come down and test one of the previous and significant lows, which preceded its highs. And that would be that it could come down to a range of 30 to 35,000. We shall see. Now, deepening the mystery.
So, no, what you're saying is the family office of Hugh Hendry would not be entering the Bitcoin market until it drops further.
I have been on record for saying that.
No, I was just recapping.
Can you see another chart, Chris?
Yes, GBTC US equity.
Okay, so GBTC is an investment trust. These are odd things. They're not ETFs. They have a net asset value. So Bitcoin has been hard to invest in. Again, we discussed that Coinbase has come to the fore by essentially making itself a trading platform for buying and selling Bitcoin because it's been so darn difficult. And it takes really quite a big fee. That fee will go down with competition. But presently, Coinbase, to my mind, it's not as absurd actually as Deliveroo. It actually has the rub of a reasonable valuation. I want to say it's on about 20 times earnings, and is presently the dominant platform for trading an asset class, which up until 2 weeks ago or so was almost $3 trillion in size. So it's enormous. So every time you touch that market, ping, 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 buying or selling, Coinbase is making money. And even the fact that Bitcoin's falling, that's a good thing. But anything that encourages investors or speculators to want to buy or sell is an event which registers commissions and spreads and profits for something like Coinbase. But this is not meant to be an advert for Coinbase. This was more I'm putting a question mark on actually what's happening in Bitcoin, and kind of I find there's a lot of, again, virgin investors, and there's a lot of pure and well-meaning thoughts associated with Bitcoin, which I may be just too old and experienced, and that I see it as naivety. But that was an astonishing. By the end of October, Bitcoin went from 15,000 to 60,000, which is so that's a fourfold, which is to say it went from $250 billion of value, of attributed value, to $1 trillion. Boom. I mean, $750 billion was invented, created, use some adjective, in little more than November, December, and January, in 3 months. I mean, that's a kind of big event.
Yeah.
Now, what was happening? So, Grayscale, this investment trust, you could go and buy its NAV in the secondary market, and it would mirror. The only asset of Grayscale is Bitcoin. You put your money in, and they buy Bitcoin, and this is the performance of Grayscale. So I struggle with its name. Now, what gets interesting is an accredited investor. I don't know what an accredited investor is.
Are you an accredited investor?
I'm an accredited, a professional investor. You can actually go to the manager of Grayscale, and buy units in the fund, buy the NAV directly. So they would issue. So you say, hey, look, I want to put $1 million in. I don't want to buy in the secondary market. I actually want to come to you. I want you to give me $1 million I'm going to give you $1 million, and you're going to get into the market, and you're going to buy $1 million. And that's basically that is going to be newly minted Bitcoin. There's only 21 million of these things that can ever be minted, and I'm giving you $1 million, and you're going to make that that precious hoard. You're going to take some out of the market for me. Now, what was interesting about it is this green thing, this bottom panel below, is showing you that depending on the mood of crazy investors, the secondary price of these assets either traded at a discount, which it never did, or it traded at a premium, which is to say that because it was so hard to get into Bitcoin, you would actually, so back here in 2017, you were paying twice the price. So Bitcoin, if you could buy it from a Coinbase. Now, Coinbase, did it exist? Yes. Did you know about it in 2017? Most unlikely. And it would be some dodgy guy that would sell you some Bitcoin. Whereas you could go into the stock market and you could just buy the secondary shares in Grayscale. And, at this point in 2017, the Bitcoin price was flat on its ass. It had fallen from, I think, $20 to $3, and it was going, and now we're at 60,000. So you paid twice the price. The premium was 100% of the NAV. Which was extreme, but typically it traded at about a 20% premium. So you could buy Bitcoin via Grayscale, but you were buying it at 20% more than its intrinsic value. Okay. Now, what happened was hedge funds went, "Oh, this is really, really interesting. I'm an accredited investor. I can come in, and the fund will sell me Bitcoin at NAV, but the secondary value in the stock market, I can sell those Bitcoin 20% higher." Now, the only catch was you had to wait 6 months. Okay. So Bitcoin is trending higher. I'm an accredited investor. Okay. I'm happy to wait 6 months. So what was happening was I'm long Bitcoin from day one. In 6 months' time, they're going to deliver it to me. Over 6 months, the price of Bitcoin, I don't know, goes from 10,000 to 15,000. I'm really happy. I get that. I get my new shares from Grayscale, and then I sell, not at 15,000, but I sell in the secondary market to the people who want to buy Grayscale at 1.2 times 15,000. So not only have I made money from Bitcoin trending higher, I've made money by then selling it to the suckers, the retail guys who are coming in and buying it at these premiums.
Yeah, it's win-win. Win-win. Yeah, that
is win-win. So when you create that, strange things happen. So in the last quarter of last year, $3 billion of hedge fund money came in. 6 billion came in last year. So for the whole year into this trust, this trust is $30 billion. 6 billion came into it last year. And of that, almost 3.5 billion came in that final quarter. And kind of that's one of the reasons why Bitcoin was surging from 15 to 60,000, that behind the scenes, there was a kind of lot of filthy arbitrage mechanisms. There was nothing kind of, hey, we're saving the world, we're going to create. Remember last week when we talked about CB what? Central bank digital currency, CBDC, and how these were a noble invention and they were going to help and ferment the rise of China. And it was good. This was just kind of greedy. Not dodgy, but this is like, there's a lot of people pulling strings, and the puppets, you and I, are like, oh, Bitcoin's going up. Oh, I like Bitcoin. And sometimes the truth can be far more interesting than the
But it shows you that if you dabble, you can get your fingers burnt, because like you're saying here, you're saying accredited investors, people like yourself that see these things, understand that the ordinary person putting their money in could be taken for a bit of a, maybe not a ride, but, they're not exactly maybe getting value for money, and they're not aware of that. And, it just means you've got to be aware of these things, haven't you? You've got to do your research before you jump in, particularly if it's your life savings or a amount of money that's very important to you.
The market always finds naivete.
Yeah.
It always finds you. It's designed to find you. It spends all of its day looking for you. So yes, you're 100% correct.
It's like they say in that movie Rounders as Matt Damon. It's a poker movie. If you don't know the idiot or whatever, the sucker at the table, you are the sucker. If you haven't identified them, do you know what I mean? Anyway, people, we will now go back to the future, move around a little bit. 2004, Hugh. We were at 2004, and we left you just towards the summer. But Hugh has we went into the sort of fourth quarter of 2004, and he's a bit of a panic because metals, gold, all drop, and everything is not happy in Camp Eclectica. Is that correct, Hugh? In October, towards the end of October 2004.
Yeah, I am just fascinated by prices. This is kind of dialect I have in my mind, and it just refuses to respect conventions. Like we're talking about 2004, and I'm looking. Anyway, 2004 was the Copper Traders Ball in London, I believe, and our boy racers, our White Sox crew, threw a great party and got really drunk, and then we're a bit fragile the next morning, and there was some rogue piece of information that came out from China. China was a bit weaker, blah, blah, blah. Noise, but, it was noise with the connotation that, maybe China was a bit slower, and that would have implications for the price of industrial metals, such as copper. And the boys in their fatigue, they're like, and the price went boom and fell. Gap down, gaps. We must talk about gaps. But the price hit an air pocket, and suddenly all commodities were trading down 5 or 6%. And of course, at the time, with my association with gold and silver, and trying to buy all of these old economy type ventures, which would be related to commodities, I felt that, and I felt that immediately in my P&L. At the same time, I had decided to spend the month of November 2004 on the island of Mustique.
Were you working, or was this just you lying on a beach?
Oh, no. So I was becoming a little bit, choose my words, a little bit disaffected by the environment at Odey. And I was beginning to say to myself, it's one of these things. Hey, listen, if you can do it, then you should do it. If you can be your own man, then why are you working for the other guy? Yeah, stick it to the man. And so I was beginning to think, and I have to say to you that I had been a locust. I had been a parasite. And Crispin Odey in London, who'd been amongst the first long-short hedge funds to open shop in Europe. We talked about the formation of the hedge fund industry. And I put on the comments, because I couldn't remember the name of the first hedge fund manager. Even now, I can't remember. Alfred Winslow Jones, I believe was the name.
Yeah, that's it. Yeah, that's it. That rings a bell. That rings a bell.
And there was an article which I shared with everyone in 1965. Now, the first hedge funds didn't appear in Europe until 1990, and in 1991, Crispin launched his fund, and he was very much funded and supported by the legendary George Soros. So I had been this parasite, and Crispin very much had been my host, and I had fed on my host, and I had worked out a lot of these. I was going to call it tricks, but really, it's the force. It's trusting the force. It's seeing it's willing your mind to see things that no one else sees. And I gained all of that insight from Crispin. But towards the end of 2004, I was beginning to think I had consumed my host, that there was very little for me to consume further. And actually the consumption at that point is we were being consumed by infighting, because he had a set of rules, and I cherished his rules because they took me from being a nobody into being a moneymaker. And so I was, if you will, the chief disciple of his faith. And I dare you to break the rules, because you would have to answer to me, and I would be very, very, very cross with you. And Crispin would break his rules. He'd just like, fuck it, excuse my French, but and you go off on a whim of fantasy. I mean, and indeed we see that. I've really struggled in these early podcast confession series to convey the narrative from these monthlies, because by and large he was writing them, and by and large, and to this day they remain. He just writes utter nonsense. I'm not saying garbage, but I'm saying nonsense. When you read it back and it's subject to the test of time, it didn't make sense then, and it doesn't make sense now. But that's part of his bon vivant. But anyway, so I was beginning to experiment with stepping outside, and how long could I step outside on my own? And so I thought to myself, hey, let's go to Mustique and let's spend a month in Mustique. And so a month away from the office and away from a kind of what was becoming a toxic environment. And Crispin and various other hedges and stuff, they used to go to Mustique, and I'm like, I fancy a bit of that. Mustique, if you don't know, is in the Caribbean. You fly to Barbados, and then you take a little hop and a skip in a plane. It is absolutely tiny. Arguably, I want to say it's smaller than St. Bart's. St. Bart's is only 25 kilometers. Mustique is smaller again. Mustique is made up of a collection of private villas like St. Bart's, but there's only one hotel, whereas there's like almost 600 bedrooms and hotel bedrooms in St. Bart's. There's roads, there's bars, there's cafes, there's discos, there's life, there's French culture in St. Bart's, and none of that in Mustique. Mustique in the month of November is an odd time to go, and it just reflected the fact that I was cheap. It was a cheap time to go to Mustique. No one was there. I rented the cheapest house on the island. It had no AC. They convinced me that it was on the beach, and it had shutters, and it was a lovely wind that blew through the island at that time of the year, which I bought. And of course, I got there. There was no damn wind. It was so damn hot. But you mentioned Jagger. I learned to walk like. What's that? I'm surprised it didn't feature in your songs. Walk like Jagger or dance like Jagger? Maroon, isn't it? Maroon.
It's not Maroon 5. Is it not like dance like Jagger? Yeah, no, move like Jagger. It's not move like Jagger.
Dance like. Move like Jagger. I learned to move like Jagger.
I think it's move like Jagger. Yeah.
It is move Jagger. This, the cheapest house on the island was bang next door to Mick's pad on Mustique. It was astonishing. And then next door again was Bryan Adams. And what was that awful Robin Hood song?
Everything I do for you. But no, I like Bryan Adams. Bryan Adams. Oh, Bryan Adams is a legend. I've got a lot of respect for Bryan Adams. I'd rather sit down with Bryan Adams than Mick Jagger. Do you know what I mean? Mick Jagger. Bryan Adams is the man. Summer of '69, Run to You. What a guy! What a guy! Absolute patriot. Love him. Love him.
That says it all. Well, I'm more in the kind of move like Jagger camp. And Tommy Hilfiger was on. Tommy Hilfiger was a neighbour as well. This was just an astonishing piece of.
And they're all family like it as well. The Queen, Prince Philip, he's obviously now passed away,
none of them. It was the Queen's sister, Prince.
No, he used to go as well. They used to go as well. I've read up. I've prepared for this podcast. I know that the history of Mustique. Well, they used to go. I'm not saying they went all the time, but they have been there repeatedly. And like you say, the Queen's sister as well.
Margaret.
No, I think she was the one that was there. I think you're correct. I think she was the one that was there the most, but they have been there. Is all I meant. They have visited and stuff like that.
She liked a bit of a bevy and a party.
Yeah, but you want to party with Bryan Adams? No way, Mick Jagger. Bryan Adams all the way.
You're probably right. You're probably right.
Exactly.
But you think about it. A few 2 years late, less than 18 months later, I was aggressively buying EMI, and I was trying to get a board seat. I was trying to buy EMI. I was trying to put it into a merger with Warner Music, and I was kind of friendly with Edgar Bronfman at the time. And for sure, I was motivated by wanting to hang out with maybe not Bryan Adams, but certainly Mick Jagger and Radiohead and whatever. And then I was, we were. Now, obviously, Mick wasn't there, Bryan wasn't there, and Tommy Hilfiger wasn't there, and nobody was there.
They might have been. They might have just kept themselves to themselves. You never know.
They weren't. Yeah. But we ended up, and it coincided with the American election, the famous one with Bush Jr., W, and
Al Gore,
and the famous chits and the recounting in Florida.
Which
I recall well. So there was a lot going on, and I had to dig myself out of a hole because the copper boys and their trading and their party. I started the month. You don't see it now, but I started the month down 4 or 5%. And what did I end that month, Chris?
October. You end up up.
No, November.
Oh, sorry, November. Well, October you end up 5.7, and in November you end up 1.7 up.
Okay, so I dug myself. It ended up. I was in Mustique, and I was trading like a dervish because I was in this huge hole, and so that worked out. But
can I interrupt you? But a lot of people in the comments ask a lot about how you get on, how you start your hedge fund, blah blah blah. We'll come to all that. Obviously, we've talked to that. But in Mustique, what do you take with you? A laptop, a phone? How do you stay connected? Because obviously, it wasn't quite the iPhone internet world of today that it is now. So how do you do that?
Good point. Well, you go to you go places where there are rich folk, which is to say that there's an infrastructure. So still early in the rollout of things like Wi-Fi and stuff like that, but we had enough for me to be engaged. I decided to go on with a laptop, and I had to go on with a BlackBerry.
Right.
I've seen or I've heard of my peer group, and they would send a team that would go a week before and set up a bank of
very nice.
Workstations.
Lovely. Oh no, I like a bit of that. Oh yes.
It's completely unnecessary. What you need is a laptop. You need an iPad Pro, and you need an iPhone Pro, and then you've got 3 screens, and you can be anywhere.
And do you work to their time, or does the people in London, because you're the hedge fund manager, you're the boss, do they work to your time, or do you work to their time, or do you all just work to the time in the markets?
Well, actually, do you know what? That's also a very good and revealing thing, because what I liked about it was that 5-hour time gap. That when I woke up, I had missed 5 hours of London time. And really, that 5 hours of London time was spent kind of fretting or anticipating how New York would open at 1:30 in the afternoon. And so it was much better just kind of waking up.
You're straight into it.
And being straight. The best one, and again, for the same reasons, albeit it's maybe a bit too much, but I love LA. And you wake up in LA, and I think you're 10 hours behind behind London. And so the day's over. And so whatever calamity befell you has befallen you. And like you don't spend the rest of the day worrying about it. It's just like, well, that happened. And then you're kind of pretty much in the next day. So funny things with time. But to wind Mustique up, Mustique had been a mistake. And we had such a filthy time. But at the end of the holiday, I was offered the opportunity to buy the house next door to Mick.
Oh.
And to buy it, really, I mean, whilst it's the cheapest house and whilst it's the shack, it was on the beach and, it was a A-lister place to be.
Are we talking millions? Are we talking millions?
You're talking $1.5 million, Chris. This is 2004. This is a heck of a long time ago.
Still,
and I was
a lot of money.
Sorely tempted. I'm like, just thinking about, the rock god in me. And my wife said, if you buy that damn house, you and I were going different directions. And so I never bought it. And of course, that house today would be worth $20 million.
And you'd be playing you'd be playing paddle tennis with Mick, or you and playing naked wrestling in the garden. You and Mick, or whatever. Maybe not naked wrestling. I don't know where I got that from, but you know what I mean. You'd be hanging out, yeah. Yeah.
I go naked. I mean, I got nothing to hide. I'd be moving like Jagger. Anyway, let's move on.
So you want to talk also about? Sorry, carry on. Sorry. Continue
so
on.
I just remembered, and I think it's important to have a continuation from and deliver on your promises. We said
gaps.
Last time that we would do gaps. Indeed.
Yeah, because
gaps. And I can work gaps because I also want to talk about China.
Yeah, well, the gaps are quite literally gaps in these charts, aren't they? So they're nothing too technical, the name, but obviously there's a bit more behind them, the reason for them. Is gaps is it an abbreviation for something, or is it just called a gap because there's a space?
No, it's a price gap. It is a point in the universe of time where the price, where the stock doesn't trade. I prepared, I think, a little bit earlier. Now I'm going to look at Baidu. But Baidu, I don't want to look at Baidu. I should be looking at Alibaba.
Yeah, we talked about that a few episodes ago. That's owned by Jack Ma, the guy that we talked about, who was going to do the huge IPO in China, and then mysteriously a couple of days before it was about to happen, the world was preparing for this. It got cancelled.
So we're looking at the price of Alibaba. We're looking at towards the end of last year, and we see that the Alibaba price had closed that day, I think, about $253 on the New York Stock Exchange, and the next day it closed at 222. But the point was, it never traded at prices between prices less than 252 and prices greater than 230, that there was a price discontinuum, that basically there had been news overnight, which I think I would attribute to the disclosure of the cancellation of the Ant IPO.
Yeah.
And so that would have come out of China on China time, and then the stock opened and it just went, like no one, given that news, no one was going to buy those shares, which had closed at 253 the previous night. No one was going to pay 253. No one was going to pay 252. No one was going to pay 249. No one was going to pay 246. No one was going to pay 243. No one was going to pay 237. No one was going to pay 232. You had to get to something like 220, 229 before you got the first bid. So that's a gap. It's like something's happened. Boom! And then this, someone just dropped a ball, or it's like, crikey, get me out, panic. It's emotion. And emotion is an engaging, and it's an interesting thing. It's a light bulb. It's like, oh, something's going on in this market. Remember, I'm voyeuristic. I love things all fantastic. I'm trying to rhyme and rap now, which I should not. Forgive me. There's a great song. I am voyeuristic, and I'll come back to it. But I am an outsider looking in. I am not reading lots of research. I am being maverick. I'm being unconventional. And I'm more, remember, all of these charts, they lend themselves to these Japanese rice traders from the 17th century. The guy that devised all this, the dude was called Oma. And the guy carried a sword. You know, he was a samurai damn warrior. I mean, that's my kind of gig.
That's your kind of good, huh?
You know, so the point with these gaps, and I should go back here, I should start sharing once more, is a gap like that, they get filled. So boom, all the way down. But the next week, people start going, well, maybe just a misunderstanding, and maybe it'll just be a 3-month delay, and then they'll be able to launch the Ant IPO, etc. You know, wishful thinking starts coming back, and what happens? People start trading in that 231, 232, 233, 234, 235, and we get all the way up to 243, and it's like, whoa, I don't know, and we come all the way back, and then another 2 weeks, and then people get emboldened, and so we go into January and February, and that gap's been filled. People have got, I've had time to think about it. I'm going to buy the shares, and so we go all the way back to where it was pre the Ant news. So the gap was filled. And then if we look here, just last week, Alibaba was fined, I think, $3 billion by the Chinese regulators. I mean, and we discussed this. China now, the Communist Party, the Chinese Communist Party's number one objective is not the stock market. It is not GDP growth. It is the perseverance of the Chinese Communist Party. In the last 20 years, the objectives of the Chinese Communist Party dovetailed and coincided with notions of the stock market going higher and GDP growth being stellar. That is not a truism. It doesn't. Those conditions do not necessarily have to be. There's not a duality. There's not at all times the Chinese Communist Party's objectives are matched by the notion of the stock market going up.
Yeah, mutually exclusive.
One of those periods where mutually exclusive, and we may have reached a point where they're mutually not exclusive. And Jack had become just a little bit too big for. He was
his boots.
The puss in his boots was a bit too big, and so they fined him. And the perverse nature of markets is like, they only fined him $3 billion. You know, this thing's worth $1 trillion. It's nothing. So this is good news. Boom, and it trades higher. So again, you get a price discontinuum because it had closed the previous night at 223.44, and the first time you could buy it, you're being offered it at like 237. So it trades whatever that was.
So gaps are not assigned to back away. So gaps are not assigned to back away from an investment. It doesn't mean something's bad. It just means that there's something happened. So that it's not a warning sign. It's, do you know what I mean? It depends on the reason.
It is. It's a warning sign. It's a warning sign. So that warning can either be positive or negative. It's just telling you. So in my world, and I always was very embarrassed about this, but in my world, I just believed in the truism that more likely than not, gaps were filled. And so if I had a risk position, if I was invested in something, and today's price is $20, $30, $40 above a gap, I'd be like, gaps are not always filled, but Sod's law says that when I own it, the gap's going to be filled.
Yeah.
And so I would be wary. So sometimes it's knowing all of that, you know, as St. Peter and Paul, you are Jesus, but there's still going to be a point where I'm going to deny that. And so knowing all that, I'm like, but gold or whatever, it's going up. And people say, yeah, but it's got a gap underneath here. I'm like, but it's going up. And so a compromise would be that I would, and the most elegant compromise at all times with uncertainty is the size of position. I would size positions whereby if it did fill the gap, it wouldn't be devastating to my performance. And it would allow me to buy it again. And my whole point, coming back to Bitcoin, is that at 60,000, for sure, it's trending, it's moving higher. I could see why someone would have a position. But you can't have a full position, because more likely than not, there wasn't a gap in Bitcoin, but the arc being so steep in its ascent, you had to be prepared for it having. You have to be prepared for anything in a profound bull market for having at least a 20% drawdown. So you'd have to size your position whereby you can buy if it falls 20%. And again, 20%. We've had a 20% decline now in Bitcoin if the price now is in the 40,000s.
Basically, don't do what Archegos did. We've talked about that a few years ago, but Archegos were too, Archegos, whatever the hedge fund, they were too open to the price of CBS going down and everything crashing down around it. Is that a fair comparison, or am I off on a tangent?
No, what you get there, which is 100% correct, position size. He was using leverage. And so he would have to be very fearful of losing, because one mistake
and you're dead.
wiped him out.
Yeah.
Now, Chris, tell me, am I shading?
No, we can just see your beautiful face and chest. Well, torso.
Okay. So just lastly on the, it says Mauve is bad, badass. So chemical, so uranium, we've discussed uranium, and I was speculating last week that uranium is going to be off to the moon, so to speak. But even in uranium, and even in the boring stock, the big safe stock in the uranium market, which is the Canadian mining producer Chemical, we have a gap now, and this is where again we get Jesus, never heard of the guy, Jesus, Savior, etc. If you look at the screen, there was a price gap round about the 11 level, and it's not huge. It's only like 20, 30, 40, 50 cents, but you see that gap. Do you see that gap?
In December, start of December. Yeah.
December of last year, and today's price is 45% greater than it was then. My fear is that at some point that gets taken out. Now, that really seems unlikely to me just now. Really seems very, very unlikely to me just now. But that's a worry. No, I would know where all my gaps are. I'm sure. So let's look at more data. Let's do 1 year here to see if we can find previous examples of gaps. There was a gap back in July on the way down, and it was subsequently filled there. That's the gap we discussed. There's a little gaps in there. Let's look at one of the other things I must mention to make this all relevant is that here we are, and Bitcoin has had a correction. And now I can hear the bells ringing.
It's the deliveries. He's delivered.
Amazon are coming. Amazon are in the house. This is exciting. So Bitcoin had been flying kind of at the end on fumes, and investing and speculating is all about how you deal with corrections. Now, gold has had a magnificent correction. Bitcoin is now in the throes of a counter trend rally. Is coming back, a counter trend correction. Now look at gold. So, and again, I put all these charts in before all of these events, kind of going, well, what could happen? So again, gold had been trapped for about 8 years below the price of about 1900. When the whole COVID thing kicked off, gold surged from 1400 to 21,000. In doing so, the price action was rapid, and so you see that it conveyed a sense of normalized trend, and it stuck to it. And then by the summer of last year, it kind of went. This is meant to be a logarithmic. I think this is a logarithmic y-axis that we're looking at the gold price chart from last summer. And when price charts go vertical on logarithmic scales, that's saying things are just getting out of hand. Okay, and I promise you, and I can find it for next week, I did put out comments on Twitter saying, I love gold, but here gold really, I've got to be prepared to buy gold at a lower price level. So here I would still own it, but I would take my position size way down, and sure enough, it went from 2100 and it went to 1700. So that's four. It had a 20 odd percent price correction. This is where now I would be trying to have my maximum size, because I think the downside is if it went below there, then I'd be scratching my head. That's not far away. It's at a 20%. It's time to be a line in gold. Enough on gold.
Also, did we not want to speak about China? And I want to talk about interest rates and ignoring them and things like that, because you wrote about that in your monthlies.
Yeah.
You know, you said basically that because China was pegged to the dollar, whatever they did with the interest rate really was irrelevant, because they were always going to be pegged to the dollar. So it was all just kind of, on the surface. It wasn't really any change. And you felt that, and you wrote in your October monthly, time to ignore that in 2004.
Yeah. I said it was like red cabbage. And so I think that is kind of tied into, I was saying just on the eve of my sojourn to Mustique, that the copper price had taken this boom and commodity prices had taken a heavy punch to the face. And so this is the kind of background to that. The Chinese were raising rates, and people were beginning to, the market's trying to put 2 and 2 together and get 43. And so they're raising rates. So they're concerned about the economy. It's overheating. They want to control it. They want to slow it down. If it slows down, then sensitive items like copper, their price are going to fall. Why do I want to take that risk? And what I was trying to say is, listen, it's just complete and utter nonsense, because China pegs the value of its currency to the dollar. And when you do that, it means that you have no autonomous domestic control over monetary conditions in your economy. And so raising interest rates is no big deal. What I mean by that is your Chinese producers were selling their goods and wares to the rest of the world, and you're receiving hundreds of billions of dollars in return for those goods and services. $1 in China, to a Chinaman, $1 in the street, you may as well give them red cabbage. I mean, what is $1? You need renminbi. And so the government comes in and it swaps those dollars for the local currency. And so when you are trading at a surplus, when you're selling more goods and services than you're actually paying for in return, so you're trading a surplus in your trading account, you're producing, there's a huge amount of money that's coming into your monetary system, and it's coming in as dollars, but it's being converted into your local currency, and that's going into the banks, and then the banks typically will be recirculating that money and giving you, my kids are off to school, and giving you loans, and so this is a kind of virtuous circle which creates prosperity, and it funnels and it propels GDP growth higher and stock markets higher. And it's kind of independent of interest rates. And a great example, because later on in my career, I wish I'd cornered, but I had the most audacious, in terms of sizing, short position against the Icelandic krona in the years 2006, 7, and early 2008. And Iceland was a place. So back in the 2000s, the Fed took rates to 1%. Bank of Japan was at 0. ECB was very, very low. And when you're on the periphery, I mean, Iceland sells cod. It's a fish nation. You know, its GDP basically is cod, the fish. Okay. Normally, if I'm a big pension fund, a sovereign wealth fund, you've kind of got to bribe me to own your silly little currency. Do you know the GDP of Iceland is a 40th of the market capitalization of Apple? A 40th, which is to say, it sells cod and is tiny, right? So I kind of need, you don't really exist. But the weird thing is Iceland was huge back in this period because they would give you 5%, something for money for nothing, right?
Yeah.
And people are like, tell me that again, how much? And so all these pension funds and sovereign wealth funds, boom, parked their money in Iceland. Now, the economist in me would say, but hey, hold on a second, 5% interest rates given that the tech crash, that would be quite a burden for the domestic economy to bear. But not at all, because when the overseas sector can't get enough, they just want to come in. They're so horny for COD. So money's pouring in. Where does it pour? It pours into the banks. The banks are like, have a loan, have a loan, have a loan, have a loan. And then you had this not an invention, but the reality of these crazy young Icelandic kind of cool dudes driving through London in the most expensive Ferraris and whatever, and they bought Hamleys, the kit, they bought everything. They even bought a discount food retailer called Iceland. Why not? They bought everything. So, and then with the housing market was beginning to really bubble in the US, and the Fed started raising rates. So they took rates up. They went 5, 6, 7, 8%. Didn't slow the Icelandic economy. So that's what I was trying to say with China, was not to. I'm not sharing, am I? You're seeing me. You're not seeing the gold price chart.
We can see you.
Yeah. Okay. Okay. I mean, I don't know if that's a good thing. I'm wearing my London cacophony of whatever from my video, which you must check out on the YouTube channel. But yeah, that's what I was trying to. Interest rates. And when you read about in the financial press about, China just raised or cut interest rates, it means nothing.
Yeah. And Hugh, well, you'll probably expand on that as we get to the 7, but Hugh ended up getting death threats from the people of Iceland. So are you welcome back in Iceland, or are you okay to go back? Or because it was a point where you weren't exactly Mr. Popular there, were you?
The thing about Iceland is if you socialize and you end up drinking one too many tequilas, and there's no such thing as one too many tequilas, to be honest. But if you're feeling a little bit rough the following day, there's nothing like a good hot shower just to kind of revitalize you. But they're all into, they are the green solution, because everything's powered off their thermal, these hot
geothermal, geothermal,
whatever they are. But the downside is there's sulfur coming out of every faucet, and you go into that shower and it's as if some Viking just ripped the eggiest fart ever, and you're just like, oh my god. I mean, so anyway, that's the one thing that's pretty.
You're not exactly reendearing yourself to these people. I mean, these people have, like, because you're the sort of. Because Hugh did a famous comment where he said, I would like to be the person, or I would have liked to be the person that broke the Bank of Iceland, which he didn't want to cause misery on people, but it was probably taken literally and ended up getting death threats. But now he's sort of slagged them their water supply off. You're not welcome back. Anyway, I will go back. I've never been to Iceland, so I will. You've been, haven't you? You've already been to Iceland. Have you not been there?
I celebrated my 30th birthday. I went to Reykjavik when no one would go to Reykjavik. So, and that's my role.
Well, I've not been, so I'd still like to go. So if anyone from Iceland is listening, or any people that don't want people there, I'm happy to go, and I will be attending at some point. And I am free of I never broke your bank or whatever. That was pre-me. Carry on, Hugh. Sorry, carry on. We're back screen sharing.
I never broke it either. But anyway.
No, but you intended to. So I never intended to.
I simply attempted to break the chain and free the citizens, the noble citizens of Iceland from the serfdom being imposed by these naive, greedy, lazy overseas investors. And at the end of this process, interest rates were 18% in Iceland. And at that point, there was a huge burden that was being placed on the shoulders of ordinary fishermen in Iceland. It was an untenable situation. And there was a point where you had to say, hey, no more, free us from this burden. And if that meant that overseas investors took a loss on a massive devaluation of the currency, and that's how it should play out. And ultimately, that's kind of how.
No, you were right. No, I was being facetious.
I was right as always.
Right.
I didn't make the $100 million that I had forecast that I was going to. I'll explain that another time. Now, we're talking about currencies, and I've had not a light bulb moment, but so what we're looking at here is we're looking at the price chart of the dollar Chinese renminbi. China is such a big country that they have two names for their currency. renminbi and yuan. I can think of other names, but anyway, we won't go there. We've upset the Islamic people enough without taking on 1.5 billion Chinese. It was one of these philosophical questions that, so in China, China's a little bit like the United Kingdom pre the emergence of Margaret Thatcher. There were capital controls. You were not trusted. Adults were not trusted. Like we're not trusted again today. We go to wear stupid masks, but anyway, and have stupid things stuck up our nose. But anyway, you weren't trusted to take your own money out of the country. I mean, even today, I think there's a limit on 10,000 pounds and sterlings and euros that you got to declare if you're taking it outside, which is just preposterous. But back then, it was like you could maybe take a fiver out of the UK, and China is a little bit like that. So it's a closed system. They don't allow free trading, and they don't allow you to take money out of China, and that's not good. But on the other hand, China, we keep being told, is such this bang whizzy incredible place. GDP is perpetually growing at 7%. Even you hit it with an alien body invasion called COVID, and it comes straight back and it's still growing at 7%. So it's this miracle economy. I'm saying all of this through kind of gritted teeth, and I'm saying it cynically. But facts are that it is back generating enormous trade surpluses, which is to say it sells way more to the rest of the world than it buys in return, and that would be succor to the argument that its currency should rise over time. My notion, and so if the currency rises, so if we look at these red lines on this immediate movement, this is actually the Chinese renminbi strengthening.
He's hypnotized by the shapes of the graphs.
Yeah.
Here we go. We're screen sharing now.
I was talking about this. So since the summer of last year, the renminbi has appreciated versus the dollar, which say it's moved from about 720 to about 650. And so what I'm saying is downward movements in that currency represent Chinese appreciation and dollar weakness. But actually, over the course of this, since 2014, the reality is the Chinese renminbi has been weakening, and it's been weakening in a trend. Or let's put it another way: the dollar has been appreciating ever so slowly, but and with wide trading bands, has been appreciating. And I didn't. And people like Kyle Bass would look at this, and they were saying, where were they? When we were here in 2017, Kyle was saying, and he was launching funds, very leveraged funds, and a lot of money. And Kyle flies private. I fly carriage because Kyle sells funds to retail, and he sold a ton of money into funds, betting that this trend in the renminbi. So at the end of 2017, the renminbi was trading 690, and he was saying it's going to bust 9. It's going to go 9, 10, 11, 12. China's going to blow up. And I was like, I couldn't foresee that. I was saying that the Chinese currency versus the dollar with a kind of 20-30% devaluation, which was implicit in what he was saying, it would be like a Mad Max world. It would be like a nuclear holocaust. All of our lives would change, and they would not change for the better. And I could not see how the authorities in China would lose control, and I could not see the economic merits for what Kai was saying. So, which is to say, I disagreed, and I had a kind of different position, and I kind of caught this move and made a nice amount of money. So, well done me, and I'm sure Kyle's made far more money over his career than I have, and so well done him. But now, when I look at it. And so with my I was thinking that this chart should kind of over time trend towards 5, which is say the bottom of this chart. I've got to say now, I renounce that. I no longer know. I no longer am prejudiced. I'm no longer silly or immature enough to kind of have a forecast, or to have a forecast which suggests that the renminbi is going to appreciate from these levels over time. And looking at this chart, actually, I'd be more tempted to bet that the currency is going to weaken once more, which is to say the dollar is going to appreciate and go back to that 7 level. And I say that just owing to the action with Jack Ma, taking him down. I've got nothing to say about Jack Ma. I mean, he's a billionaire. He had some entrepreneurial flair and some insight. Well done him. But the authorities are clamping down on that. Most significantly, again, and still in the echo chamber of my mind, is their comments about daring to control credit. If China starts to have quantitative credit restrictions in domestic mainland China, and then China will blow up in a manner that Japan did in 1989. Now, against that, and when I say that, I'm going to stop sharing for a second, because I'm still I saw some people still putting some Twitter things out. So 2 things. I shared a Twitter, which was my newsletter from December 2013, and I was like, what if I was to say I turned bullish on US equity assets? Is that something that would be of interest to you? And the resounding answer was no. I knew the answer would be no. The answer was no. People were like, last bear turns bullish. You're a fool. And of course, we know that I'm not a fool. But I put that out just to kind of show that I'm not always a perma bear. And to this day, people are still recirculating. Someone recirculated that saying, did you high tick on Bitcoin or on stock markets? Because they attribute that bullish word, which was written in 2013, and they staple it onto April 2021. Give me a break, people. Okay. Another thing that I put out, I wanted to show you, I've got 2 charts. If I could find it, Chris, you can see me and not the chart. Is that right?
That's correct, yeah.
If I could see it, there are 2 charts, and people might help me. I've got a question, because I do know we get some serious investors who watch this thing as well. What is the difference between MSCI China index? So that is a global index for global asset allocators, and it is the benchmark for Chinese investing. It's an index of thousands of domestic Chinese shares. What is the difference between that and the Shanghai Comp? I want to say the Shanghai Comp is pretty much the 300 largest domestic shares. I don't think they include Baidu and Tencent and things like that. I think it's the kind of nut and bolts. It's the real China, not the kind of the thing that we see elsewhere.
Hugh's pulled me up on my pronunciation. He thinks I don't mention the D in his name enough. So Hugh Hendry.
Well done. Now,
yes.
What do you see? You see the MSCI China index. And so I'm breaking my time rule again. I'm really annoyed. So I'm going to wrap this thing up. But this is China, and this goes back. This is like 30 years of Chinese data. And you can, and this is like 2000. I started my hedge fund around about 2002, and at that point, Chinese equities had been devastated. So this period was, I don't know if we discussed previously, Thailand had been a miracle economy. There was a bubble in Asian equities. China was part of that. There was retribution. Currencies collapsed. China managed. I think China at that point had a devaluation as well, and this is carnage. You're going from 140 bear market territory, 80% waterfall decline, down to below 20. But then true value is to be found, and China gets entry into the World Trade Organization. People want to buy Chinese assets. Like I'm saying, it's like Reykjavik. The money's flowing in. Interest rates don't matter. Banks are perpetuating money into many, many ventures, and the stock market within the space of, so the stock market between 2003 and 2008, it goes from $20 to 100. It goes up 5 times. So extraordinary speculative boom. And what this now is saying, if we look at the fullness of time over these 30, 40 years, we're pretty close. If we went through 140 on this chart, then we would be back. That would be a breakout. So here I am having misgivings about China and saying, are they going to have what they're doing to pro Jack Ma, and they're going to have quantitative restrictions on bank lending, and that would be a bust. But this chart is saying you should buy. You should buy all things China. So for me, that's confusing. Time has defeated us again. People, you're watching 20 minutes of this. On average, you watch 21 minutes. And on average, we are putting out content of about an hour and 20 minutes. I apologize. We will have chapter headings so you can speed through, but it's dispiriting because you're only watching 20 minutes. So
but what wasn't dispiriting was your performance. Well, we'll just finish up. You did end 2004, up 8%. So far on our journey from start to finish, Eclectica, your fund, is up 55% against the stock market up 36%. So from October 2002 to the end of 2004, we are now in this Confessions. Hugh is outperforming the stock market by 20%. So things are good. Well,
things are good. And it's funny because at the end of that, in the December monthly of 2004, I took solace and I took inspiration from one of the most magnificent autobiographies I've read, and it's by Walter Yetnikov, and he ran one of the big US labels. And the subtitle to his book was Confessions of a Music Mogul in an Age of Excess. And actually what we're doing is we're kind of doing Jean-Hugues Hendricks, and it's the Confessions of a Maverick Investor, but very much in the age of credit excess. Okay, and next week I'm leaving a message from the past to my future self. Next week I want to discuss banks again. I want to go back into this period of the past, and I want to go back into the aftermath of the tech crash. I want to look at particular banks in America. I want to look at those banks today, and again I want to muse about. I want to see if we get any more data. What happens in the next week? Does the Chinese stock market, does it come down a bit? Does the currency sell off? Or am I completely wrong? Just now, any of these comments that I'm making with regard to China, I would not urge anyone to be short China. I am simply seeing some vibrations in the universe which make me think of a future dislocation, but it is way too early to have that as a risk position. Thank you, Chris, and thank you all for listening.
Exactly. And everybody, please leave your comments. And remember, as we started this podcast, any investor knows you can't always get what you want.